I'm really happy to announce the coming panel about venture capital for Africa, given that capital is becoming more and more abundant in Africa, which means African startups are going to have more capital and more support to scale outside their countries and outside their markets. Let us hear from the VCs who are there to support and bring some added values, the venture capital scene and the venture capital thought leaders. We have here Margaret O'Connor, Chair of Launch Africa Venture Fund. She's here to come on stage. Mohamed Okasha, Managing Partner, Disruptech Ventures. We have Tariq Asad, Managing Partner at Algebra Ventures. Wael Amin, Partner at Sawari Ventures. And Leland Rice, co-founder and CEO of Dedalus Global and AFTS. This is like a real lineup of the all-stars of the VCs. So please take your seat and let us kickstart the day, the end of the day. Thank you. So until Leland Rice can join us, I'll sub for him very briefly for just a few minutes, just to let you guys be introduced to the lineup of all stars of the VC world here, notably in Egypt, and we have an Africa-focused fund as well. Would you mind please introducing yourselves to the audience, and notably the audience that is online as well, and give them context of the company you're representing, but also if there's any exciting news you wanna or business news in general, business news you wanna put forward. So maybe we can start with you, Margaret.
Sure. Hi. Thank you all for staying with us for this last session. I'm Margaret O'Connor. I'm the chair of Launch Africa Venture Fund. Launch Africa is the single most active tech VC fund at the seed level. In the past 14 months, we have deployed, I had to write it down because it keeps going up, almost $15 million in 73 ventures in 15 countries. Yay! And several of our portfolio companies are here. I'm particularly delighted to be here in Cairo for my first trip. When I joined Launch Africa 2 years ago, I moved from South Africa to London. And my esteemed GPs, they're like, okay, Margaret, you've been all over Africa for 20 years. You're like in a great position to be our global ambassador and connect global LPs to Africa and really to help explain de-risking investment in Africa tech. And I said, happy to do it as long as we can include Egypt in our investment mandate, because I was a very active Endeavor entrepreneur and working with like Series B, C, and beyond companies in Africa, raising global capital. And the head of Endeavor just said, you got to connect Egypt to the rest of Africa, and the whole ecosystem will benefit. And today's been a great testimony to this kind of shared ecosystem approach. Launch Africa also, has been very disruptive in our approach. So in order to accomplish that very rapid deployment of capital, we've had to innovate on the due diligence process. And a key part of that has been working with long-established partners at accelerators and incubators. So Flat 6 Labs is part of our incubator intake. Clearly, there's a couple of others in Egypt that we need to include. Zach George, one of the GPs, set up Startup Bootcamp Africa and Barclays Rise Center, and spent 10 years on the continent really building those incubator and accelerator relationships. So the deal pipeline is insane. We have a really talented group of analysts. Mohamed Karar is among them. So really lots of people looking at systems, speeding and automating systems for due diligence, and a really great trust network of LPs, and delighted to meet you guys to expand the network of trusted LPs for deal referral and co-investment. Enough going.
My name is Wael Amin. I'm a partner with the venture firm Sawari Ventures. Sawari Ventures started investing in early stage venture in Egypt in 2010. So more than 10 years ago now. At the beginning, it was very exotic. This was not an established industry. Pipeline was very different. Routes to exit were very complex. And I'm very proud to be sitting here today and with fellow star panelists in the venture capital industry and witnessing maybe some of the best years for the Egyptian and regional venture ecosystem, and we like to believe that we played an important part in building that, and super excited about the next 10 years and what the possibilities are if we continue on the same trajectory.
Shall I go? Okay, I'm the newcomer to the VC world. So we are a small fund, fintech focused on Egypt. Giving my background, I was one of the founders of Sawari, one of the famous fintech companies. So I believed with my colleagues that there is a great opportunity for Egypt in the next 3 to 5 years in the fintech space. So we wanted to capture this opportunity and launch our first fund. So we are new, just a year and a half, but we still believe that there is a great opportunity in the fintech space in Egypt. So happy to be here with the team. Thank you.
I'm Leland, your tardy moderator. Excuse my lateness. You know it's a good panel when you're not even needed. But thank you all for those introductions. One of the things that struck me...
I haven't done mine. I'm Tariq Asad. I'm one of the partners at Algebra Ventures. Algebra Ventures is a Series A and seed venture investor. We invest predominantly in Egypt, but also in other parts of the Middle East and Africa. We started out with a $54 million fund, of which we have 21 companies in the portfolio. We're very proud to have backed some phenomenal entrepreneurs. And we're now in the final stages of closing our second fund, which will be almost double the size, but placing more of an emphasis on, of course, Egypt, but also looking more to sub-Saharan Africa.
Thank you. Something that struck me as I caught that second half of your introductions, we have some incumbents, as much as you can be an incumbent in the tech VC space, and we have a newcomer. As a longtime observer of private capital markets into African technology, specifically fintech, it's no secret that the number of headline raises has dramatically jumped recently. The amount of capital coming into Egypt and other ecosystems, but Egypt especially, has grown exponentially. And the list of players involved in rounds has gotten bigger. You used to be able to kind of guess who was leading this round as soon as you saw the check size. That's all changed. I'm wondering how that influx of capital and that influx of new funds, and sometimes different innovative funds, how that changes the way you source and diligence deals. Happy to have anyone jump in. Wael?
Yeah. So actually, first of all, it's a huge positive impact for the ecosystem, right? Because this is not a zero-sum game. So with the influx of funds, there is more and more entrepreneurs who are deciding to sort of leave their comfort zone and get into create their own ventures. Also, there is sort of a correlation between the availability of funds and the ambitiousness of the entrepreneurs and the business plans. So if you know that you can conceivably raise $100 million in this environment, then you're going to go after these multi-billion-dollar opportunities, and if you don't, then you're going to go for smaller. It's important to realize that the influx of funds sort of benefits the entire ecosystem. It also, as a venture capital investor, you take advantage of it. It allows you to bring more values to the startups, right? Because often the optimal cap table is not one VC investor doing an entire company forever on his own. Even with the influx of funds, our part of the world has a huge disparity between demand and supply of venture capital. There is a lot more opportunity than there is money. and we need to leverage all possible funds coming into the market to make companies successful.
Can I comment on that? I think because we are talking specifically about fintech today, so I think Egypt is a great opportunity because of reasons that have matured throughout the number of years and now have reached a point where everybody is eyeing Egypt as a potential investment place. You have a big country, young population, more than 75% is below 40 years old, mostly digital connected with the penetration of smartphones and internet. You have a very favorable regulatory framework. So you have between the central bank and FRA a number of things that happen in the last few years, which is phenomenal. If you add to this what happened with the COVID-19 and the acceleration that happened to the whole ecosystem in terms of e-commerce and digital payment, I think the rate of growth that we see in the startup now is completely different what we used to see a few years ago. I mean, so with the valuations and the influx of fund is justifiable because we are facing startups that are growing much, much faster than we used to see before. Adding to this also what Wael mentioned is the quality of founders that we see in the market now is completely different as well. And this is because of the favorable things that I mentioned, but also because of the success stories like Sawari and e-finance and a lot of fintech companies that came to the market and did very well. That is a catalyst, and they just encouraged a lot of founders to go and start their own. So there is a lot of money coming in, but there is opportunities emerging every day, much more than we used to see a few years ago.
And I could just build on what you were saying. So I was in New York in August. American who've been in Africa for 20 years, in Asia with building up the MasterCard network there for 10 years. So I've met a lot of American institutional investors who are still taking a wait-and-see approach to Africa. The unicorns in fintech have obviously captured their imagination and some of their peer group coming in. But one of the potential problems is just with a lot of American institutional investors is like 10x mentality for every investment. And I think many of you would agree with me, an important role of venture capital, especially early stage venture capital in Africa, is really this job creation and helping to disrupt inefficient industries. And I guess, you know, I think for me and Launch Africa Fund 2, the consolidation that we're going to see after all of this influx of money now to enable a lot of new companies to get started, I'm expecting in 3 to 5 years, you know, being able to deploy much bigger checks to help consolidate sectors in tech. And that's when that big chunky capital is going to be really efficiently deployed.
That's interesting. You've mentioned the influx of international capital. You said institutional capital is still largely playing a wait and see.
Yep.
But in the last couple of years, we've seen deployment of capital. It's not so institutional, but still non-Africa or non-emerging market themed capital investing in African fintechs.
And I'm just going to provide a story here. So Launch Africa launches a retail investment platform. So we get private equity investors to write a personal check so that they can have a front seat at, you know, at what's happening in Africa. And that's been a really effective way, again, to begin to de-risk Africa, to have the LPs not only, you know, passively watch, but co-invest. So we're having some of these private equity partners as individual LPs double down on some of our portfolio companies. And, you know, we've deployed almost $15 million. Our LPs, I had to write it down, have deployed $9 million. So it's a really effective strategy, again, of not kind of going through the institutional due diligence on these early stage deals. And I guess the other thing is with the pressure on returns in private equity, many of the institutions being like, okay, how do we go earlier and earlier VC? I think all of us will be going through some interesting due diligence with private equity firms about, okay, how do we work together differently and create new mechanisms and management structures?
Yeah, I can add to that maybe a slightly different perspective, that I'm not worried about a lot of international capital coming in and flooding the market. I think it's still early days, and I think the validation is meaningful. So, when you see a $1 billion US-based fund that has had success stories all over the globe come to this part of the world and invest, even if they're investing a little capital, and it's maybe a step ahead of the wait-and-see approach. But I think that validates our ecosystem and opens up the market for significantly more capital. I think there's so many opportunities and so many things that have not been done in this part of the world, and all you have to do is look at slightly more advanced, structurally similar geographies in Latin America and Asia, and you can sort of, there's a crystal ball effect as to what's likely to happen in this part of the world. If you get the validation from the talent, the people with very high opportunity cost coming to entrepreneurship, as well as the capital, both local capital and international capital, it comes together and creates a lot of momentum, which is very exciting for us.
Yeah.
And if I can ask a question of my colleagues, because I've heard in the past about nascent interest or more growing interest in corporate venture capital among Egyptian institutions. Wonder if you could kind of speak about that?
Sorry, is the question to me?
Any of you? I just.
It is a good question. We had a good panel on CVC earlier today, or alternative venture investment. And
Okay, I'm sorry, I didn't.
No,
hear that.
dovetails perfectly because there was we had C Ventures was speaking and forecasted somewhat breaking news that there were going to be more corporate venture capital funds launching in the near term in Egypt. And I had the same question that we talked about someone who had venture debt. We had blended finance from a UN program. We had corporate venture capital from C Ventures. I was curious if everything that you said about the influx of capital being inclusive and being a rising tide that raises all ships, if that's true for other alternative models too, are they equally inclusive? So I think that's a great question.
I mean, I can speak to co-investment with corporate venture capital. We've seen a lot of it, largely in a sort of, dip your toes in the water kind of approach. Relative to their balance sheets, it's insignificant. So I think they're dabbling with it, and in many instances, it's the individuals in family-owned businesses. Let's say it's the family, the second generation of family members who are investing some of their capital to play. It's play money still, but I think it is changing and will change very significantly, very quickly.
Yeah, no, that's a great question. I wanted to draw a contrast, maybe a contrast, between the people on this stage and some of this international capital that we're talking about. You are all very much local capital, Egyptian capital for Egyptian solutions, Africa focused for a very long time, and a deep portfolio. How does it, aside from the obvious ways of sort of value add through local market knowledge, how does that localness offer a competitive advantage for you? Something we hear from startups on the ground in Africa a lot is that Silicon Valley model fund structures, 2 and 20, 10-year horizon, multiple expectations, aren't always well suited for the African markets in which they're deployed in. Do you find that you're able to follow different models? Are you introducing any innovations into your fund structures or your fund life cycles because of your sort of local presence? And that really applies to everyone on the stage. So.
Well, I started the introduction saying we disrupted the due diligence process. We're also shorter lifespan, so really looking to exit between 5 and 7 years. And we are very much focused on helping plug this liquidity at the capital gap at the seed stage and exiting to secondaries. We're really focused on helping the founders stop fundraising and focused on building their businesses. So in terms of local market knowledge, it's a lot about helping them access the relevant enterprise customers quickly, being able to parachute them in, to the decision makers and helping them hit those numbers and get to Series A in 12 to 18 months. So it's a very replicable model. And with the local market knowledge, I mean, part of the conversations we're having with LPs and portfolio companies in Egypt is assessing where else in Africa might be relevant for the expansion plan. So we have a Pan-African team, and we have 35 very highly seasoned advisory board members who work directly with portfolio companies. And again, that dramatically expands their geographical market knowledge as well as domain expertise. So it's really helping the entrepreneurs understand, how do I execute quickly in my home market, which are the expansion markets, and the talent equation. I think being local, you really understand who are the right next hires for your portfolio companies, and not necessarily getting a marquee name in that's very expensive and not used to rolling up their sleeves too early, but knowing who the talent is that you need for future funding rounds.
Yeah, makes sense. Anyone else can draw a contrast to the way they deploy capital more in a local sense?
So I want to say there's, at least in our experience from an LP standpoint, there's a lot of demand for the sort of standard 10+2 venture capital model. So there's this huge amount of capital sitting on the sides trying to find great managers who can sort of help them take advantage of the Africa opportunity without the associated risk, right? So there is work to be done to sort of package this in a traditional model as a way to create the asset class in Africa. So to make venture investment an asset class that is well understood and accessible by a variety of investors, whether there are traditional LPs or DFIs or pension funds or what have you. So that work still needs to be done. We have more funds coming out of Egypt, but there's still a large opportunity in Africa to sort of package that opportunity in a way that is palatable to all of the capital looking to get onto the continent and take advantage of the massive opportunity that Okasha was describing. Now, like when you hire an employee for your company, there are times when you want to bring in someone from abroad and you say, okay, I'm going to bring in this person for international expansion, and he has done that in Southeast Asia, and he's going to be fantastic for us here in Egypt. But there are also roles when you need to bring in someone local. So if you want to bring in an HR director for your company in Egypt, you're going to say, okay, this is a situation where I need local expertise, where I need someone who has seen this done in other companies locally. And it's the same with founders raising, right? So there are stages and rounds and allocations where you feel you need to bring in some of that international expertise, and there are times when you need someone who has done this here, who can help you see around the corner, who can help you with the specificities of this ecosystem, this regulator, this type of competition. So I think there is an opportunity for everyone.
Yeah, I think that we have exactly what Wael was referring. I mean, fintech is a regulated industry, so I mean, a local expertise is very much needed, as much as you need to exposure to the other execution in different countries. But the regulation, understanding the local markets, tactics is something that is very keen. So definitely for any fintech company in Egypt, the mix between local and international is very much needed in the early stage.
Yeah. Just to build on what you're saying, it's both to understand the current regulatory regime and what's around the corner in the context of political risk and the unwritten rules.
I think we are in Africa in general and in Egypt specifically in a market that is still maturing in terms of regulation. So there is something wrong you cannot do, something right that you should do, and there is a gray market, the gray area. And the space that's for fintech companies to innovate is usually to work in these gray areas and try to create a model that's adding value, so the regulator can later come and build a regulation around that. So this is where the opportunity is, and this is something that really needs someone who understands the market to help you to navigate through this regulation.
Yeah. Speaking of that market specificity, Margaret, I know you have a broad Pan-African footprint at Launch Africa. I'm curious to know what markets are most interesting to you now and why. And for Algebra, Sawari, and Disrupt, I'm curious, what's your appetite for deals outside of Egypt and specifically in sub-Saharan Africa, if at all?
Well, like I started saying, Egypt is very highly interesting to Launch Africa. There's obviously great deals here. We are also looking at some frontier market investments. So we're really lucky to have great pipeline in Francophone Africa, and we're looking, Sudan is a market of great interest. Obviously, we have to see what happens when things calm down and stabilize. Yep.
Yeah. Any wondering
I think
eyes?
for us, we look for structural similarity. So and to be honest, in many cases, we follow our entrepreneurs. So when we see our companies develop a solution that works really well in Cairo, will not necessarily work really well in Dubai, because these are very different environments, and spending power is different, etc. But might work really well in Nairobi or in Lagos. We just follow the brightest people in the room, who are typically our entrepreneurs.
Yeah.
So we started off with Egypt, Tunisia, and Morocco was our first fund. We think there is a humongous opportunity in the rest of Africa, sub-Saharan Africa. We are a believer of sort of early stage investment having to be done locally. So I mean, with early stage investment, there is very little in terms of the numbers and the financial reports and the income statements and balance sheets to go by. So you need to be on the ground. You need to understand how the market operates. You need to know who the people are. So for us, expansion across Africa will involve sort of setting up sort of feet on the ground in different countries, because our belief is you have to be there in order to do it.
Any specific countries that pique your interest?
So it's actually almost the opposite, right? So there are a few countries that we deem sort of either very, very difficult at the current time, or in the case of South Africa, maybe highly competitive from a venture standpoint. But other than that, there's opportunity in this continent everywhere you look.
Yeah. Is Disrupt looking
I think
abroad?
Egypt is the next big thing now.
There's a lot to do in Egypt, obviously.
I'm clear on that.
I mean, speaking of the attractiveness of Egypt, this is a very positive group, so I'm not sure I'm going to get you to say anything controversial on this matter, but you mentioned that, well, first of all, again, outside observer, valuations have skyrocketed.
Yeah.
You mentioned tailwinds, demographic and otherwise, but those didn't come overnight in the same way that these valuation spikes came overnight. Is there any piece of you that's concerned that some of these raises that we're seeing are being overvalued?
Of course. I mean, but it happens to any other country. I mean, it is a path that most of the countries have went through. It is the job of us as a VC community is to be rational and try to be selective, because some of the valuation is overvalued for the current time, but in the long term, this company or this startup will overpass the valuation. And there is other startups or other ideas that we think overvalued and will continue to overvalued for a long time. So you have to be cautious on this one. But ultimately, there will be some correction, and the market will correct itself. But overall, I think the valuation is still in Egypt is much lower than Africa. In like Nigeria and Kenya, the valuation have passed the points that we have. So we're still in the early days. And in countries like Latin America and in Asia, the correction have happened and things still moving in the positive direction. That's my point of view.
Yeah.
And if I could just comment on the high valuation. So I think, one of the big valuation accelerators is Y Combinator, right? We're all wrestling with that because with Launch Africa, planning to exit many of our investments at Series A, we know if we get in on this round with the Y Combinator alum, it's pretty easy to find the right follow-on investor. However, we're really clear about appropriate valuations. So we walk away from some really excellent deals, some of whom could be unicorns, because we're like, this is crazy, and it's sending the wrong message to the market.
I'll just mention that I don't want to keep all the questions to the end. So if anyone has questions, we'll take them as we go. We'll keep this as conversational as possible. One question I love to ask to venture investors is about technology. We do a VC panel every year at this summit. It's the most consistent panel we have. It's never the same. By definition, venture investors are very nimble, ahead of trends, looking at the next best thing. So I love to pose this question. Are there asset classes or trends or technologies that are bright on your radar now that weren't a year or two ago? Maybe we'll start from the algebra perspective.
Not as much a specific technology, more I think themes that we've identified that we really are interested in. Probably the biggest one is base of the pyramid. That in the context of Egypt and I think the rest of the continent, the access to the long tail of consumers, which traditionally has been an expensive and difficult proposition, has improved significantly. So now, with a mobile app, you can both the cost to serve and the reach have changed very dramatically. So the ability to put a local app in the hands of someone who typically has Facebook and WhatsApp and maybe TikTok, it really is a game changer for many within fintech and outside of fintech. So that's something that we're very excited about, particularly given the demographic distribution of Egypt. And that's something that we believe many companies will succeed because if you go into the long end of the deep end of the long tail, you don't have as much competition. There's tremendous opportunity to provide services to the underserved and just tremendous potential upside. So it's something we're very excited about.
Yeah, interesting.
So at Launch Africa, we made one investment in behavior tech. I don't even know if that's been, if there is behavior tech.
It is now.
There is now, yes.
Tech,
so a pioneer in behavior technology. So this is basically bringing the sensors and data analytics into market research. And so this behavior tech company is working in the healthcare sector for market research there. But as soon as I heard about kind of the vision of the founder, I could immediately see the applications to financial services and wealth management. So behavior tech.
That's interesting.
I will add, I think data analytics or using data as an alternative scoring mechanism is something that Africa needs a lot because of the lack of the credit bureaus and the credit history for most of the Africans in general. So I think the dependency on data for digital lending, as an example, is a clear opportunity, and it is coming quickly to the market.
Wael?
We spend a lot of time thinking about this question clearly, and we try to project even a little bit further out, and I think a little bit further out, every VC firm on earth is thinking about Web 3.0, ownership, crypto, metaverse, how these are going to sort of come together to create almost a new class of opportunity and a new class of companies and startups. And in many ways, just like, for example, payment took off in Kenya through M-Pesa faster than anyone would have ever dreamt or predicted. Africa is really a hotbed of opportunity for these technologies to catch fire and become massive ahead of maybe other economies in the world.
Quick question just for context. What percentage of your portfolio is represented by fintech? Generally high level?
100%.
100%? Well?
I would say 25%.
25
today.
Is there something else that's the lion's share?
Is there something else, sorry?
Something else that's the lion's share, that it takes a bigger percentage of your portfolio than fintech?
So we are pretty evenly split between fintech, education technology, logistics and transport, and health.
Similar mix to you. Did you say ed tech and agriculture? Yeah.
Assuming those have embedded finance in them, they might all be fintech.
Right.
So
Exactly.
the definition is getting broader as we go along.
So we're quite similar to Sawari. But I was just going to say, if you include embedded finance in it, it gets a very, very different number.
Right. If you exclude embedded finance, how significant?
Yeah, it's 20-25%, something.
So on the other side of the sort of opportunities and technology coin, I'm curious to know the risks looming on the horizon. Are there big macro risks, political risks, regulatory risks, cyclical risks that are creating bearishness in your positions? Margaret?
Regulatory risk. Obviously, political risk is par for the course, right? And we were having a conversation, is political risk overrated? Well, it depends on what your investment mandate is. And so that's clearly, and we were talking about the benefit of local knowledge. So we feel like we can mitigate political risk by ensuring we have the right local knowledge and obviously working those local networks. Cyclical risk, I'm going to think about that more.
Okay.
In Africa, I think one of the risks is currency risk usually, because I mean we make investment valuation all in US dollars, and most of the currencies are sensitive, I would say. So there is a risk that you invest and then you find your valuation by half in one day.
Yeah, I mean, what worries me personally, and I speak for myself, probably not for the firm, but I worry about hubris. So we are witnessing extraordinary years in the ecosystem and startups in Egypt and Africa. And I worry that we attribute the success that we're seeing to how smart we are as investors and how amazing the entrepreneurs are, and sort of lose sight of where success comes from and how to keep and protect success. So that's what worries me personally.
Yeah, oh, that's interesting.
And if I could just build on it, because I was an entrepreneur who came of age during Internet 1.0.
Yes.
So I left MasterCard to set up one of the first marketing tech companies, first mover advantage. And obviously, the investors, pumping us, and then, dip, and then rebuilding. So I think I wasn't sure about cyclical risk, but absolutely right. And it's, having had the opportunity to live through some of these cycles, and when I see hubris in our entrepreneurs now, I'm quick to address that.
How do you do that?
In a consultative manner, starting with, let's revisit your motivations. And if they're playing a long game, to understand what they need to do at each stage of the process with the different stakeholders, not just the investors.
Yeah.
I think on that, related to that point, I encourage people to Google M1 money supply in the US chart, and try not to be shocked by just the hockey stick. It's insane.
Mitigating another risk you mentioned, Margaret, this is kind of a question easier for you to answer. How do you mitigate the regulatory risk? Nigeria is a big example of that, and I know that's a big part of your portfolio and anybody's portfolio with Pan-African intents.
And I'll share a very recent experience. I was fortunate enough to have dinner just before I came to Cairo with a very senior government official from Lagos who has just left, so he could speak honestly. And that, of course, was my first question. And I say that to all our LPs. Number one risk in our portfolio is regulatory risk, especially Nigeria. So, collectively, we're really trying to work through this and with everyone else in the ecosystem. And someone from the inside, he said that there's probably very little that investors can do because you have some of the smartest people in the country who spend a bit of time in government, but ultimately the decision is not rational. Some of the regulatory decisions that affect us.
Yeah, I can't say I haven't noticed that.
And I'm really encouraged by what I hear here in Egypt. And certainly in South Africa, regulatory risk is not anything that worries me because I've seen, the regulator really working hard to engage with the private sector. So there, and having spent my MasterCard career starting in Singapore, so there are lots of examples of regulators who are doing the right thing for their country and positively engaging. But I fear that that's not going to happen anytime soon in Nigeria.
Yeah, I have to say a consistent theme throughout today has been positive feedback on the regulatory environment, both for innovation and venture here in Egypt, and not just because the central bank was sitting at the table here. So a slightly different version of that question for the Egypt-based funds. Are there any regulatory evolutions that you hope for or expect, things on the horizon that might change the way you view the market or deploy capital in the market?
Yeah, I mean, the one thing that we have been all waiting for is the digital onboarding of the electronic KYC, which is something that the central bank has said many times that it's going to allow it. And that will definitely reduce the acquisition costs dramatically for money in the startup and opening a new wave of innovation. So if one thing that I want the central bank to focus on is digital onboarding.
Yeah, I just want to say that there is opportunity to create value through deregulation outside of just the central bank, right? So a lot of other industries in Egypt are tightly regulated and could benefit from deregulation. I mean, health, education, all of these are super tightly regulated, and any or progressive deregulation in them will create opportunities for the entire economy. So that's my input.
Yeah. Does that track with you, Tarek?
I share Mohamed's view. I think EKYC is a game changer, and that's the one we've sort of been waiting for some time. So, looking forward to that.
Great. We have about 5 or 6 minutes, so I'll just pay attention. Any questions for our panelists, particularly from startups who might be raising money?
I have a small question. I have a mic, it's fine. Thank you. So I think someone here said about the valuations being adjusted, or I think it was you, Okasha, who said in Asia there was coming back to the readjustment of what was going wrong. Can you tell us more about this, please? What did these countries do specifically to go back to normal and not overvalued valuations?
I think we can do nothing. I mean, it's a market dynamics, so it's a supply and demand. So valuation goes up because you have a very good startup that everybody wants to come in, so the valuation goes up and up and up. And then one day the expectation from this startup did not meet the valuation that was put in it. So we see down rounds, or we see a full collapse of some startups. But what I'm saying, if this one of 100, then or two in the 100, so still the whole ecosystem is healthy, and the correction is normal. And because we are a VC, we know that we invest in companies that might go to zero. This is normal planning. What I'm saying is, as long as the valuation is going up with the value creation that's happening in the company is happening, so the risk is minimal. But when the valuation is going up without any value creation or much, much higher, then there is a possible bump that might cause off, and it will hurt the whole ecosystem. But what I'm saying is what's happening in Egypt is still far from this compared to Africa and what's happening to the Asian market. And the market will correct itself. That's my take.
And just another comment on the valuations. So in addition to Launch Africa, I also sit on the board of a UK-listed disruptive tech investment fund, and Klarna, Starling, and Wise are in that portfolio. And we spend hours talking about, valuation and is this going to continue to rise? And as a listed fund, there's an incredible amount of scrutiny. And with Wise listing and spiking, climbing 400% in a couple of months, and then dipping, it's just, as you say, market corrections and exits. I think this is a really important. What we in Africa need to help to encourage is some really continue to encourage these exits, not just unicorns, But, we're seeing, we've seen lots of trade sales and some more IPOs. It doesn't all have to be a unicorn, so.
Yeah. I'll ask one question on behalf, Lindsay.
Hi, good evening. Thank you so much. I'm kind of loud.
That's for the live streaming. They have to hear you. We have a lot of startups in our virtual audience, I will mention. We have several hundred.
So then this should be relevant, because I thought it would be interesting to have somebody's point of view on, obviously there are a lot of startups, there's a lot of fintech companies, everybody's jumping on board, coming at you. What, as an investor, or with your groups, really stands out and makes you, you look at 1 million pitch decks, you hear 1 million ideas, they're coming to you, you have the money, they need the money. What really makes them stand out, and what are you looking for? Like, when you go through those, that pops and makes you think these are the ones that we want to follow a little further along with.
So number one is, how is this deal referred, right? So when you say looking at pitch decks, well, probably I'm only looking at a pitch deck because it was referred by a trusted entrepreneur, a trusted LP, or an incubator. So, everyone has different selection.
Filter.
And then, what makes us excited? Team, in early stage, team, right? Is this an entrepreneur that's capable of really building an exceptional business that can scale beyond their home market and deliver exceptional value and implement through all of the many challenges that are going to, come their way, and lead a team and grow a team. So team, traction, are people paying for this? It may be really cool, but are our customers paying real money, monthly recurring revenue? Velocity, we get to encounter lots of startups that stall if they haven't figured out the pivot and how to regain market momentum. I'm not interested in a company that's been kind of plateaued for 3 out of 5 years.
Okay, yeah, that's great. Thank you.
Yeah, that's a great question, Lindsay. Anyone else? We've got 1 minute left. I'd love to hear one.
We're a multi-stage investor, so the earlier stage it is, the more it's about the team, capability and passion, and just the fundamentals of the market. And then the more mature it gets, the more it's about that as well as the numbers.
Great. Well, we're wrapping up right on time, which might... Yes. Please, yeah.
Sorry, thank you all. Especially Margaret, do you think that we will see a retail level of investment within the African continent where the everyday African is now investing locally?
Yes, and we've invested in a fintech that's going to make that even more accessible. So we're beginning to see fractional investments through digital banking platforms. So Envil is the fintech that we've invested in. It is an African team that has tested this in Middle America, underserved Americans. There are poor Americans, or working class Americans, and this fractional ownership. We also have an investment in Nigeria where fractional ownership in US listed equities. I mean, there are many other examples, but I think certainly among African young working people, there's enormous interest in equity investment, both public and private markets equity investment. I've been, there's always been a lot of hype about crowdfunding. I haven't seen many crowdfunding campaigns in Africa blow my mind, but I mean, clearly crowdfunding is also an interesting development.
I'll plug, as a co-investor in Future Africa, I'll plug Future Africa as a syndicate of fractional investing.
Sure.
We're on the mark. One comment, the aggregate level of thought leadership on this panel is exceptional, so we're really grateful for your insights today. Thank you very much. Thank you. Thank you, everyone.
Thank you.